Yo, my people, man, I'm back again with another YouTube video. But this YouTube video is just gonna be, it's not gonna be a lesson. It's gonna be a trade. I'm just gonna show you a trade that I took today, and it's a GU trade, so GBP USD. I can't really show you like live trades because I'm busy throughout the day. So all I can really do is like show you like screenshots and stuff of how the day went on replay mode. But obviously I'll post up the screenshot on MetaTrader 5 of my actual like entry positions, just to prove that, you know, I really took the trades on MetaTrader 5 as well. Notice I said MetaTrader 5, not 4, because 4 is where you can alter entry positions like with this AI shit, or I don't know how people do it. So yeah, man, you know, just done it on MetaTrader 5 just to keep the haters quiet. You know, a lot of people be chatting shit in the comment sections. But anyways, this is where I journal all my trades. This is Notion. This ain't no promotion. Oh, fucking hell, I'm rhyming. But yeah, this is Notion. So yeah, this is just where I journal all my trades. So yeah, today, Tuesday, 17th. Got GU shorts. So yeah, what high and medium impact news drivers should I be aware of? So today we had at 8:30 Eastern Standard Time, got core retail sales and retail sales. So USD high impact news. We had orange medium impact news and JPY high impact news, but I was trading a pound USD, so I was more focused on the US dollar. What was my draw on liquidity? Monday's lows. Obviously I shorted the pound, so my bias was bearish for the day. High probability, yes. So there was going to be volatility injected into the market, and that's due to the high impact news on the USD. And did I make any mistakes during the previous market session? No, I didn't. I didn't trade the London session or the Asia session. I waited that out. Then I traded the New York session. And then what improvements can I make? I've made mistakes in the past, and that's due to not concentrating on like market structure and timing my entries better. So you know, when the markets, they say time is time before price. Normally I'm so focused on price that I forget the time aspect, and then yeah, I just end up fucking shit up. But yeah, man, we learn from the mistakes, and we go again. So yeah, here are the screenshots. We've got the weekly time frame. We had, so this is the week. This is this week, basically. So I put the black arrow there, and it is live. So we've got the time. So it's 3 days left for this candle's close. So it is Tuesday. The previous candle, or the previous week, sorry, price opened. So this is the opening price. Price moved lower, then it moved higher, and then it closed bullish. So the reason why this candle is green is because price closed above opening price. So that's what makes it green. If price had closed lower than opening price, that's when it would be black, and it's called a bearish candle. So yeah, so price closed bullish, so it closed closer to this high. So I expected price to move higher to take out this buy side liquidity and buy side liquidity above there, which that's in the past historical data, but it's just cut off from the screenshot. But yeah, I was aiming to target that and that. But as you can see, for the week, price is just tanked lower. But I think that's due to price rejecting off of this high and closing in between, or in this range, in this candle's range. If it had closed above here, then we could have seen price target those highs. But yeah, price is closed in that range, and it's displacing lower. If we go to the daily now, the order flow on the daily time frame is bullish. So we've got this order block here, So this down candle before the up move, which forms an order block. So if we, I haven't drawn that out in time because I didn't really need to on the chart, just to clean up the chart. So yeah, we have an order block here. Price has come back into that order block and it's respected it, and it's moved higher. It's come back into it again. It's respected it again, and it's dug even deeper into that order block, and then it's taken off here, forming another order block. Price has come back into that order block. It's come to the midpoint of that order block, and then it's rejected off it. But as you can see here, this candle is a horrible close. This is an indecision candle, so price closed close to the candle's open. So it's just wicked. It's wicked down, it's wicked up, and then it's closed close to the opening price. So call that an indecision candle. And then today, price just tanked lower to the downside, and I'll show you why on the lower time frames in a second. So we've got a 4-hour time frame now. Here's where it starts to get interesting. So that Monday's candle, the reason why it closed so terribly was because price opened, it moved higher to the upside, it swept Friday's highs and then moved back lower, and then closed in between Friday's, or in between, yeah, in Friday's range. So this is Friday's range from down here to up here. We've got the sweep of Friday's high, and then price moved lower and closed in Friday's range. So the close is close to Monday's low. So when Tuesday opens, sorry, you'd expect to target Monday's low and possibly Friday's low as well, because the market's already done the work up here. So it's already taken out that high and displaced lower to the downside. Tuesday, this 4-hour candle then closes through this fair value gap. So this was a fair value gap in the past. So got this candle's high matched up with this candle's low, and then we've got this huge displacement candle which forms the gap. So this is a fair value gap where price came back into it. It rejected off it, so it's respecting that fair value gap. It respected it once more. Notice how it's closing above this midpoint of the fair value gap. So it's a very sensitive area at the midpoint of a fair value gap. So it's respected it, closed above it, respected it again, it's closed above it, and then it finally just gave up, and then price closed fully below it. So it's completely disrespected it, and now that's turned into an inverted fair value gap where price has then come back into it, respected that inverted fair value gap, and then it's closed bearish. So it's closed, this candle closed close to this low, and it's closed close to Monday's low. So that's why I wrote here, I'm aiming for Monday's low today, nothing else matters. So that's what I was targeting going into the New York session. If we go to the lower time frames, we've got the hourly time frame here. As you can see, the London session, so the London session is this candle, and this candle. Those three candles. The London session closed below Asia's low. Hang on. Yeah, sorry about that. My mic was moving insane. So, yeah. The London session is formed by these three candles. So we've got this candle here, got this candle here, and then this candle here. As I've written here, the London closed below Asia session's low, and then possible New York continuation. So this last candle, which is the last hour of the London session, it closed below Asia session. It had a full close below Asia session's low. So as you can see now, during the New York session, price moved back into this order block here. So this green candle before the down move, it forms the order block. So we've got a 1 hour order block where price moves into it, respects it, and then with the 8 a.m. candle during the New York session, which is an important candle during that session, displaces lower to the downside and closes bearish. So this is giving us signs and signals that price wants to target Monday's low, or possibly Friday's low as well. I'm going to say why I reached for Friday's lows. So after that candle close, this candle's where the magic happened when I entered my trade. So if we go on to my entry chart, so this is the 15-minute time frame. So starting from here, notice how Asia session is printed. So it's just hovering around, or it's accumulating, sorry, staying in a tight range. Then as soon as midnight opens, it sweeps that Asian range. So Asia has swept paired with interbank shorts. So once price sweeps Asia's high, price just starts accumulating. This is called time distortion. So price is just holding itself until the London session open. Then that's when price kicks into gear. Then we get a displacement lower. It forms a fair value gap. Like, it's doing this all on purpose. People would say that the markets are random, but why didn't this happen during here? But it happened as soon as the London open, the London session opened. Then we've got this displacement, so it's a sharp move to the downside. That's the algorithms kicking into gear. We've got a fair value gap formed. Price respected it completely. Price could have just moved higher and disrespected it, but it respected it because it knows where it wants to go. It's aiming for Monday's low. So price respected it, continued to move lower throughout London session, and then we've got the London lunch session where the market goes dead again. So again, once again, time distortion. Price is just holding itself until the New York session, and then price is just respecting that order block. So on the higher time frame, obviously it looks clean on the hourly time frame, but because this is the lower time frame, these are just wicks on the higher time frame. So price has moved higher. It's moved higher. Then price took out the high during the New York session. Price took out the high of London lunch. So from the end of London to the beginning of New York, price took out the London lunch highs, then displaced lower during New York session. So like I said again, that's the algorithms kicking into gear. Price goes dead during London lunch, then it kicks into gear during the New York session, displaces lower, moves back into this 15-minute order block. So the last up candle before the down move, price has gone back up into it, respected it, where we took our sell positions, or I took my sell position, and then price just tanks from there. Like, it completely tanks straight to hell. I never got my entry here. I'm going to put a screenshot up here in a second. I never took my entry up here because I was at work, man. I took my entry more around this side or these sides. But yeah, I'll put the screenshot up in the corner, as you can see. So the fact that I took my short positions this low, it wouldn't make sense to just target here. So I just took a gamble and then targeted Friday's lows as well. And as you can see, it fucking tanked, man, straight to hell. But obviously you can't get greedy. A lot of people would hold that trade, but obviously I have my plan. Once you have a plan, you stick to that plan, man. Once you start to deviate from your plan, that's when shit goes left, man. So yeah, my plan was just to target Monday and Friday's lows, and I'm out of there, man. So yeah, man, that's me just being transparent in that, man. But yeah, man, that's that for this video, man. It's just a quick breakdown of what I saw today and why I took that GBP USD trade. If you want to continue to see more videos like this, just drop a like, subscribe, do what you got to do, man. And yeah, man, just trade safe for the rest of the week. We've got the federal fund rates tomorrow on the 18th, which, oh, sorry, today. No, I'm making this video. Where I'm at, it's 12 midnight now. So yeah, got the federal fund rates today. So yeah, man, trade safe tomorrow. Trade cautiously. Markets is gonna do a whole load of fuck shit, man. Especially with this war stuff going on as well. So yeah, man, safe trading and have a good evening.